Welcome to another edition of the Technical Market Update. And I can't believe it's Friday already. This week has run off so quickly. I don't know if it has been the same for you, but for me, the week just started and we're here on Friday. I'm looking forward to the weekend to do some relaxing. Okay, and relaxing the markets have been doing over the last week or so, and with this consolidation that's happening across the different currency pairs. Now, if you're a day trader or you trade a 15 or 5 minute chart, you may not feel the effects of the consolidation as much because there are trading opportunities out there for the taking. If you're a swing trader or a trend trader, as which I trade, then you will be chopped around because the markets are just swinging back and forth within ranges. Okay, so looking at the euro versus the US dollar, we are still in the triangle that we have been speaking about all week, and the market rallied up yesterday, and today so far we're seeing a doji star candle. Dojis normally mean a period of indecision. Going into the 50-minute chart, we see that the market rallied up to the daily R1 pivot point. Market rallied up to the daily R1 at 108.46 and has backed off to the central pivot so far this morning. That's what has happened in the euro so far. The market, and we may see the market settle down here. Normally on Friday afternoons, nothing much happens unless there's some major news announcement or some shocker. But we'll see how this plays out. For the week so far, the euro is up on the week. Now, next week, I'm expecting a bit more action here. I'm expecting the markets to break either way. Either the market rallies up, takes out these highs here, this resistance here, and rallies up to test this swing high here near the 114 region. Or the market continues down, and then if it continues down and closes below 104, we could be setting up for a test of the parity level, which is at $1, and then the media will be all over that. So that's what we're keeping an eye out on in the euro. Looking at the Canadian dollar, the market broke down, and there was some follow through selling out of this channel consolidation yesterday. Let me just draw the consolidation. And the market, there was some follow through selling. There was a break here. There was some follow through selling here, and the market is forming a hammer pattern. Now, what you could see is that the market could come back up and test this breakout period and continue down, or it could continue upwards. Now, as I said yesterday, this is a counter trend trade, because if we take a look at the trend here, the trend is up, and if you take this breakout trade, you will be taking a counter trend trade on the daily chart. That's if you are trading the daily chart. If you are trading the 15-minute chart, the trend clearly in the Canadian dollar is to the downside. So a lot of times these trends, it depends on what your perspective. Are we looking at the daily chart, or we're looking at the weekly chart or the 15-minute chart? But on the 15-minute chart, the trend, and the hourly chart, the trend in the Canadian dollar is down. So you have to kind of keep that in mind when you're trading these charts. I mentioned that we personally are short the euro versus the Canadian dollar because we're doing a position trade, and this trend is to the downside. So I prefer to play Canadian dollar strength and euro weakness on the euro versus Canadian dollar. That is in keeping with my trading system of trading with the larger trend. And just a note about consolidations, that when the markets consolidate, if you're a swing trader, you can be frustrated. But and you can be frustrated and the market may chop you up and down. But personally, I'm not frustrated when we get consolidations, because it can lead to some very aggressive breakouts in the market. And these, when the market breaks, these breaks sometimes are mild, but sometimes they are pretty violent in terms of the move is fairly large. And you could see, for example, let's say this breaks to the upside, the British pound versus Australian dollar, you could see a move well past these highs here up into the 205 region. So you could see 1,000 pip move, a 1,200 pip move in pretty quick order out of these breakouts. So I personally realize that it can be frustrating and choppy, but the break is where we make a lot of our money. So that's why I'm positioning the portfolio now and to anticipate a lot of these breakouts. Now, if the market moves in the opposite direction of where we're going, for example, we are currently long the British pound, Australian dollar. If it moves in the opposite direction, we'll just take a small loss and move on to the next trade, because that's how we trade. When you're trading, you cannot be afraid of losses. Losses are a part of trading, and if you find yourself being afraid of losses, then ironically, your fear of losses will make you lose even more, and you are paralyzed and can't trade, and then you are not making any money. And the whole point of trading is to make money. I know in society we're conditioned to not like to lose anything, but in trading it's just a part of trading. So I look at losses as, for example, if you have a business, the losses are your inventory, your losses are your expenses. They are part of doing business, a cost of doing business. Now, I know a lot of folks out there wouldn't tell you that, but that's just how trading is. Okay, taking a look at the Australian dollar, another market in consolidation. And what we see is that the market tested this trend line, and this trend line is currently acting as resistance in the Australian dollar. This is the daily chart of the USD Australian dollar, and as you can see, the market is finding resistance at this trend line. So a lot of time when you're trading, preparation is key, and keeping an eye out on the markets, because I'm expecting these markets to break either to the upside or to the downside, and whichever way it breaks, we can make money from it. Okay, so taking a look at the stock market, because I do get questions about the stock market. The stock market really, since the year has started, hasn't done much. I mean, and as you can see, we started, this is 2015, we started at this level. This is SPY. We started roughly at the 206, 207, and we're at 208. The market hasn't really done anything much for the year, and we're in a consolidation here on the stock market. Sorry, wrong trend line. This is roughly what's happening. We're in a channel consolidation on the daily chart in the stock market. So there are a lot of newsletters out there that are saying that the market is topping out. The market looks exhausted, because take a look. I mean, we have been in such a strong uptrend, ever since 2009. And at some point, the market should reverse. Now, there's no evidence it has reversed yet, but at some point, it will reverse and will correct. So, this is a market I am personally taking a keen look at. Okay, and if, as I always say, if preparation is very important when you're trading, because when you're trading you can make a lot of money, you can make a good living off trading, but you just have to be prepared. You have to be prepared to do your analysis every day. Look at the market, see where the opportunities are, because there are opportunities out there that you can make money. You just have to look at it every day and not be complacent, because if you become good at trading, you can make very good money. Okay, if you don't have the time, as some of us don't have the time sometimes to do certain things. For example, I I want to do some repairs around my home, but I just don't have the time yet. So I had to hire someone to do it. So if you don't have the time to trade for yourself, or you don't feel that you can trade for yourself yet, there's nothing wrong. What you can do is still make money from the markets by taking part in our signals. And if you want some more information about signals, click on the link below this video and get started, because as I said, opportunities are out there in the market. It's just for you to hop on a board, whether you learn to do it yourself or follow our signals. Okay, so thank you very much for listening. I hope you have a wonderful weekend, and we'll see each other again soon. Thank you.